Hey everyone, regarding that thing, on Tuesday, tomorrow I'll release the first video about how I prepare for the stock market with that 50 US dollars. I'll explain the strategies I've been using recently, what I need to prepare, and my actual views. So, let me explain. There are a few aspects to consider. The first aspect is that I completely disregard political matters. I don't look at political issues when it comes to stocks. I only focus on economic factors. How many of Donald Trump's tariff threats have been implemented? Unfortunately, I think they will be implemented. There's a very high chance, about 90%. Secondly, will the implementation of these economic tariffs provoke retaliation from other countries? And to what extent? That's the second point. Then, how much damage will these things cause to the economy? And how high will inflation be? The stock market will be worried, interest rates will fall. And the final thing to consider is whether Donald Trump will change his stance. If the stock market drops, will he retract these measures? This video is about that. Although Sad & Poor is only 3% off its historical high, but the market's investment fear is very intense. This kind of reversal is quite unusual, and the market remains at a high point. It hasn't collapsed, but the market is very worried about what will happen. The U.S. stock market initially fell yesterday due to Donald Trump and Zelensky having a fallout, but later it was said that as soon as Zelensky knew the situation, he didn't leave, which led to a rebound. This is exactly how it started, with a drop here and a rebound there, needing to drop and rebound. Scary, right? It's all about dropping and rebounding, dropping and rebounding. This is NVIDIA. Let's pay attention to a few stocks. NVIDIA has dropped 13% from the beginning of the year until now, from the highest point of $153 at the start of the year. It dropped back to $124, a 13% decrease. TSMC went from $226 at the beginning of the year to $180 now, a drop of $21. No, it's not just that. It dropped 10%, not from the start of the year, but from the highest point of $226. It dropped more than 20%. The Spruik investment. The analysis in the February 28th research report says what's happening with market sentiment. The sense of fear has already been integrated into the collective mood. The market is very scared. Look, I'm talking with some seasoned investment friends here. I've been talking about the tariff risks of Donald Trump, and they said the market is still very good, very confident, until just this week, they felt the market would reach new highs. The indicators measuring economic uncertainty have already surged past the levels seen during the worst of the pandemic, including economists like Scott Baker, who designed the Economic Policy Uncertainty Index, which has reached new highs. It was during the worst of the pandemic. Think about how severe it was back then, right? Economic uncertainty. Last Friday, the University of Michigan released the February Consumer Sentiment Index. It dropped to the lowest levels since November 2023, during a peak in interest rates, affecting the performance of the U.S. stock market. CNN also has something called the Fear and Greed Index, which had already dropped to 20 points by the morning of February 28th. This indicates extreme fear, neutral, greed, extreme. Level of fear. This is calculated based on momentum, options activity, demand for jump bonds, and hedging assets. It's derived from 5 factors. The weekly survey by the American Association of Individual Investors shows that the sentiment for looking at accounts is at 29.2. It dropped to 19.4, meaning there are still 19.4% of people who think the U.S. stock market will rise. This is the lowest level since the collapse of Silicon Valley Bank in March 2023. During the direct banking crisis in March 2023, which was certainly the lowest level, the bearish sentiment rose from 40.5 to 60, marking the largest single-week increase since August 2019. What happened in 2019? In 2019, that was when the trade war broke out, causing the market to drop 20%. In history, there have only been 6 weeks where the bearish index was higher than it is now. Are you worried? It happened just 6 times. Such a high bearish index. This includes the 1990 economic recession, Iraq's invasion of Kuwait, the financial crisis from 2007 to 2009, and September 2022, right before the market bottomed out, all under significant events. That was because of the pandemic. Recently, Wall Street magnate Cohen expressed deep concern about the market outlook. Also, as Bob Burford mentioned, the Wallop Ford Index is rarely this high. In terms of PE, it's over 10%, higher than normal for U.S. stocks. It might face significant selection in 2025. Although, this year, the Standard & Poor's has still seen a slight increase. The outlook for the U.S. economy is uncertain, partly due to Donald Trump's tariff policies. This could potentially trigger a trade war with China. This time, it's not just a trade war with China, but a trade war with the whole world. Even with a global trade war, the U.S. would only fall into a short-term economic recession. I think these tariff issues will take a long time before you see the economic losses, unless it triggers a lot of inflation. That would be a big problem. That would be a big problem. Cohen predicts that the economic growth rate will drop from 2.5% to 1.5% in the second half of the year. This is the first time he has held a pessimistic view of the market, and he believes this downward trend might only last for a year. In the past, the U.S. has quickly overcome recessions, usually in just 2 or 3 quarters, which is why they see it this way. However, if there is stagflation, that would be serious and persistent. The chief global strategist for a securities firm believes that the market is beginning to doubt the strength of U.S. economic growth. The Wall Street Journal has an article discussing this topic. If the tariff threats impact the U.S. stock market, when will Donald Trump intervene? Will he change his strategy? Is the focus on saving the market? Bank of America strategist Hartnett mentioned something called the Donald Trump put option. This option is available for purchase, and it's estimated that if the S&P 500 drops to 5,600 to 5,700 points, the government might need to take action, because Donald Trump cares a lot about the stock market. Hartnett said, "I don't know. I think Donald Trump doesn't know either. He wonders what actions the government might take to save it, but he doesn't know. It might be fiscal policy, a stimulus policy, right? A stimulus policy would completely negate what he has done, because any stimulus package he implemented in 2020 has caused a severe deficit in the United States, or actions to curb the deficit. And not just demand to surround these 3 things, to lower interest rates, right?" Donald Trump put options refer to the method of boosting the market during times of market turmoil. Because during Donald Trump's first term, there was a similar Federal Reserve put option. But it doesn't mean the government will personally buy stocks. It just means they will do something with this option. At a certain point, you buy the option. The government will use fiscal policy to save the economy and the old stock market. This concept is based on Donald Trump using the U.S. stock market as an indicator of his presidency's success. During his first term, he often mentioned on social media that the stock market was reaching new highs and boasted about the market's gains during his administration. The head of asset allocation for the Americas at UBS Global Wealth Management, Del Rahim, said that Donald Trump is very focused on the U.S. stock market and sees it as a real-time indicator of market approval and support for his policies. Donald Trump also faced such extreme volatility from day one. In 2018, the S&P 500 fell due to the U.S.-China trade war and Federal Reserve rate hikes, erasing 20% of the earlier gains that year. When the S&P 500 drops by 10%, will this policy change? Observers noted a quick agreement with China to end the trade war. He was immediately alarmed, as noted in the 2019 report by Chatham House, even though there are put options. They are not always effective because even if Donald Trump influences the market, it doesn't mean the market will be saved by the government. In places like the United States, the ability of local governments is limited. Not to mention, even for the all-powerful government in China, saving the market is very difficult. If they want to save the market, it might already be beyond saving. In 2020, the COVID-19 pandemic caused the U.S. stock market to crash, wiping out all the gains made during Donald Trump's tenure. The government's aggressive spending plan. The government's massive rescue plan rollout, along with the Federal Reserve's extensive quantitative easing, halted the sell-off, and the stock market rebounded on that day. As of now, it's too early to say when the Donald Trump administration will intervene, but it is expected that the Standard & Poor's 500 index, if it drops at least 10%, Donald Trump will take action. Now, we accept this. If it drops 10%, Donald Trump will take some market rescue actions, but that doesn't mean he will relax. The federal government departments reduction in spending and abandonment of tariff policies because he has invested too much. He has already invested too much. Reversing the tariff policy is really not that easy, right? There are some differences. In the U.S.-China trade war, there are some differences. Having said so much, once committed, this is the prisoner's dilemma. That is, trade policy is a prisoner's dilemma. Why is it a prisoner's dilemma? Once you start imposing tariffs, others retaliate. And once they retaliate, you're stuck. The result is that everyone suffers because it's within the prisoner's dilemma. It takes a lot of time and effort to gradually untangle these knots. After the war, it took us several decades to untangle these knots and reach the level of free trade we had a few years ago. A senior researcher at Pepperstone said, Donald Trump's aggressive approach to immigration and spending cuts indicates that this time he might be more willing to endure opposition and countermeasures, meaning he might feel overly confident. He continues to move forward. He will overcome your opposition. Donald Trump. Referring to a previous post on Truth Social, he mentioned that his tariff policies might cause some pain for Americans. This means he is preparing for some consumer backlash in the American economy. He will continue, won't he? He won't relax the tariffs just because he encounters some pain, right? The tariff policy is actually a major operation. His current tariff policy is reshaping America's tax plan. This tariff plan reverses what has been done over the past 70 years, like increasing tariffs, especially on allies like Canada and Mexico, imposing a 25% tariff on them. imposing a 25% tariff on the EU. Recently, there are some views suggesting that Donald Trump is shifting his focus from the stock market to the bond market. This is because of what Treasury Secretary Steven Mnuchin and Elon Musk have said, which inspired Elon Musk on the X platform regarding the government's commitment to controlling the U.S. budget deficit. This has boosted the demand for bonds. Now, if the U.S. manages to control this deficit, they hope to control the deficit within 2 years. By controlling the deficit, there would be no need to issue new bonds, and the supply of bonds would decrease. He warned investors who are shorting bonds, saying, "I think you're betting in the wrong direction." That is, they continued with tax cuts amounting to $4.5 trillion over 10 years. The version that was passed results in over $400 billion annually. If this path continues, and if they can't cut the budget or reduce spending, the U.S. will face a $1.8 trillion deficit in the future. This is it. And he said that the numbers would balance out in 2 years. How many times did Musk cut? According to him, it was over 70 billion. Some people followed up and counted each item and the actual amount he managed to cut. Some say it's over 10 billion, while others say it's several billion. Citigroup stock strategists have not yet set the strike price for Donald Trump's options, but they believe that if Standard & Poor's returns to a fair market value of 5,500 points, it might attract investors to return, meaning if the market rebounds a bit, those investors might come back. Over the past 2 years, investors have been willing to buy on dips when the market pulls back, even if Donald Trump takes no action. A 10% drop might attract buyers to flood the market for self-recovery. Currently, it's down 3%, so if it drops another 7%, will those people buy in? Right now, we see that the leading stocks are quite significant, and these are the most popular stocks in the market. Nvidia and Tesla are currently the hottest stocks, but they have already dropped over 40%. Tesla has dropped over 40%. All right, we need to be cautious when the market drops to 10%, as there might be some rebound. Will Donald Trump change his policy? I think, even if it drops 10%, he won't change his policy. He might ask Powell to cut interest rates, but to withdraw tariffs for the things that the Fed is doing. Reducing subsidies for things that Elon Musk is doing. It's not the right time yet. This is something we need to consider.